So I see here a huge list of indicators here, and I don't use any of them. Okay. And the reason why I don't use any of them is because I don't believe that you need to have price, right? As far as trading, I don't believe you need to have anything but price on your chart in order to trade, right? I mean, if everything can be designated with the price, why are we going to have an actual indicator explain to us and tell us that it first has to trigger and then we enter? So you're going to hear me talk about a lot about how I think that everything you need is already given to you, right? I mean, once price starts moving down, right? Is that telling you price is going up? Absolutely not. Actually, the opposite. Price is telling you it's going down. We as traders, we try to pick bottoms, right? So we're going to say, okay, 1107, it's going to turn around, right? And then it'll go through 1107. It'll say, okay, it's 1104. That's where it's going to turn around. And we're always playing these games. So I actually, just 1 second, guys. Sorry about that, guys. Um, so in actuality, I don't want to. I don't need an indicator tell me I need to go short now. I need to price to tell me. I want price to explain it to me. If it's going short, it's going short, right? If it's going long, it's going long. So in the process of doing these live webinars and showing you guys how to trade, if anything, I want you guys to take out Bob Cunha. That's right. Bob, I'm from Jersey, right? There's a lot of Cunhas out there. Newark, right? um, there's a lot of situation. There's a situation where we don't want to really follow anything but what's happening on the chart. So I have to say that I rather the price tell me what to do than have anything else tell me what to do. Okay, so as an example, is there any reason for me to go long, guys? Right? We have a double bar short 1109 to go short. We have our ATO here to go short. There's no reason to go long. So why are we constantly trying to beat it? And instead of understanding that price is doing something and we should follow it. All right. Now, if price comes up and closes back up here, then I have a reason to go long. This happens to be the Atlas line right here, right? So I'm not necessarily waiting for the Atlas line to tell me go long or go short. Instead, I'd rather have price prove itself, close higher, and then I go long. So it's a little bit different. Instead of me waiting for the indicator to trigger, I'd rather let price dictate what occurs. All right? Questions, guys? Very good. Excuse me. So what we have going on here as far as the Atlas line is we have two consecutive bars that close below the Atlas line. It gives you an order to go short, right? So 1109 was my short. I don't go for 4 or 5 points, 6 points every day because that's unrealistic on each trade. I much rather have 2 points banked and then I look for the next trade. All right. And yes, if price, excuse me, if price hits the Atlas line, would you not short on a bounce down? I would, Andy. But remember, I have to let price dictate what occurs. So instead of me having a blind limit order right here at resistance, why don't I instead, Andy, let price come up to it, and you can even penetrate it, but let it touch it and then close beneath it. So it closes here. That way, not only did I have a bounce off of resistance, but I allowed the price to prove itself that it still wanted to continue down by closing below the Atlas line. And that way, when you think about it, you're actually um, letting price, in essence, prove it to you. and show you and demonstrate that it's not ready to go higher. Now, if a price went right through it and closed higher, then I'll say, all right, now price is thinking about going higher. So you really have, as a trader, not just to be kind of running with the crowd. I'd rather you understand what's going on, understand how price is acting, and then trade off of it. All right? All right, Andy? So I wouldn't have necessarily a limit order here, blind limit order, to go short, because we don't know. News event can come out and go straight through it, and you're going to be in trouble. I'd rather let price, in essence, touch the Atlas line and then close back down below it. A short signal will automatically be provided to you at the close of that candle. It'll tell you where to go in, and then you hit it short. All right, Andy? Marcelo, can the position and angle of the outline change during the day? Not necessarily, no. It could, Marcelo, but Marcel, I'm sorry, but for the most part, no. Okay. We have a lot of people here in the room, so I'm glad you guys took the opportunity to come out this morning. If you are looking to do any trading right now, look to go short. We had 1109 short order right here. All right, and excuse me, if you are thinking about going long, let's let price, in essence, dictate to go long. All right, we're not going to pick bottoms, we're not going to pick tops. We're in essence going to allow what occurs with price to tell us to go long or short. All right, guys? How many of you here are trading the at the open method? So I just have a quick count here. All right, very good. Nick? Richard? Yes, that's correct. I would only go long because I want price to prove itself. So I would wait for a second consecutive close above it, and an order will give you it'll trigger an order to go long. All right. Nick, it says here you say you trade off of price alone without using indicators. The Atlas line seems to be an indicator. It's a good point, Nick. But in essence, I'm not waiting for the Atlas line to trigger a price or an entry into the market. Right? When you have two moving averages, you're waiting for those two moving averages to cross, or an MACD to go above zero or to cross. You're waiting for something to happen with the indicator to tell you to go long. A little bit of a difference here, Nick. I like to think of it as far as price showing me that it's going up there, closing back above it. So really the Atlas line is just a reference point to filter a trade long or short. So it's a little bit different. Right? It's actually the opposite of what an indicator does. David, the average trade could be 1 bar, could be 3, 4 bars. It really depends on what the price is showing you. And as an example, if you have a range of 1.5 points or 1 point where the market's trading very slow, for example, let's take a look here. This is 1107.50 and this is 1106. So this is a 1.5 points. How long do you think it'll take you to get 2, 3, 4 points if the range of each one of these bars is a point, 1.5 points? It'll take a long time, right? And on the other case, if you have a fast market, it's volatile, 3, 4, 5 points, each one of these bars, you're going to get in and out very fast. Right, Dave? Richard, I would wait for a signal to appear. It'll hit if it bounces off the Atlas line and then comes back down, right? That's the way that an order will be given. Or if it penetrates the Atlas line, wait for price to set up, and then we go long only if 2 consecutive bars close back above.